So SC Housing offers down payment assistance to different counties in and throughout South Carolina. And I've seen this post going around everywhere and giving money to people. But here's one thing I want to make sure everyone understands, and it's very simple. Free money isn't free. There's always going to be a cost to receive down payment assistance, whether it's in the rate, whether it's upfront costs, how long you have that down payment assistance for. There's always something to pay in order to receive down payment assistance, okay? Let me break it down for you. Let's look at South Carolina housing. Now, don't get me wrong. I love down payment assistance. It's great. It's wonderful for people that need it in order to get into homes. The only thing about it is that it catches people off guard. It's easy to not understand what is involved with down payment assistance. It's not just a matter of, hey, here's money and go buy your house. There's more to it. So first things first, you got to qualify for the loan. FHA means minimum credit score of 640 for their mortgage program. Okay, 97% conventional requires 640 credit score. USDA, VA, all 640. Now you don't need a 640 score to get an FHA loan, to get conventional, to USDA, VA. You don't need a 640 for all those loan programs. But if you're going to use the SC Housing Homeownership Program, you're going to need a 640 score. The cost for down payment assistance, 1% origination fee. Okay, so you got to keep that in mind. Any prepaid items, usual and customary closing costs, that's usually anything that may be tied to title, because title has to record a second lien for these programs. We'll touch on second lien in a minute. And government fees and taxes. Okay. Down payment assistance, second mortgage loans are available to qualified borrowers. Down payment assistance in this case is a second mortgage. You are borrowing the down payment assistance amount. Now, here's the important part now that people fail to notice. 15-year forgivable DPA term. What does that mean? Here's the kicker to programs like this. This last paragraph says, this is a second mortgage with a 15-year term. The interest rate is 0 and there are no monthly payments. Okay, that's usually what a forgivable down payment program is. The borrower must occupy the subject property for the term of 15 years of the lien for the assistance to be fully forgiven. $450 purchase price, and let's say we're borrowing 3.5%, that means that we are borrowing $15,750. So for 15 years, you are going to owe $15,750. Whether you refinance, whether you sell the house. If you're refinancing, then this second mortgage or second lien has to be able to stay in the second lien. If you refinance, it becomes the first lien and your new mortgage becomes the second lien. The first mortgage can never be a second lien. It has to be the first lien. Whatever it is that you're refinancing, you need to tack on another $15,750 in order to pay off that second mortgage. Okay, so whether you're refinancing, if you're trying to take equity out of your home, go ahead and subtract 15 or add 15,750 to your loan amount because you're going to need it to pay it off. If you sell your house, go ahead and subtract $15,750 if you sell before 15 years is up, because you're going to have to pay that loan amount back. It's not just about how much money they can give you. It's not going to be $40,000 or $50,000. It's going to be up to. That up to means 3 or 3.5%. Some do 5%. But whatever that percentage is that they max at, it's going to be your hard stop based on what you're buying. What I always like to point out to clients, with our investors, we offer terms much lower than that. 10 years. 5 years, some even 6 months. We have an investor, they will forgive the day after you close. Make sure that it's the best down payment option that you can choose. Each down payment assistance has its own cost to it, whether you have to stick with it for 15 years, a higher interest rate, pay more closing costs in order to receive that money. reach out to me so I can let you know whether programs like this is the best fit for you or if something else may be a better fit for you, because my power is giving you the power of homeownership.